Joining us now is Ted Bauman. He's a senior research analyst and economist at Banyan Hill Publishing. Ted, it's good to have you with us. What are the economic implications here in the U.S. and for the global economy with the trade war that is only escalating?
Well, thanks for having me back. I think that the implications are pretty dire, actually. I mean, I think the critical issue here is that this is not a normal pathway for any sort of trade negotiation. This is really two big powers that are driven by not only economic considerations, but by the desire to save face that are ratcheting up this process rather than actually seeking a resolution. The implications for the U.S. economy, I think we've moved to the stage where ordinary consumers are going to start seeing prices go up. We're going to start seeing pressure on retail employment. And certainly we're going to see massive pressure on the farming sector. And the big question is, can the Trump administration consider or continue to soften that pressure by doling out money to them? And that's going to pose another political issue, I think, for the administration.
Yeah, Ted, how does the U.S. resolve this? How does President Trump resolve this while at the same time saving face?
Well, I don't know that there's a way to do it because, you know, in any kind of negotiation, you always look for what's called an off-ramp. And that's basically a way that both sides can agree, here's how we're going to solve the problem that benefits both of us. But the way that the Trump administration has ratcheted up the pressure, or perhaps just the president himself, it's really not clear what that off-ramp is. And I suspect that the Chinese are going to wait to the outcome of the next election, which means that ordinary investors and ordinary consumers and citizens really need to be thinking about 18 to 36 months in terms of a timeline here. So this could get worse before it gets better.
Ted, what I think is important is that many of Trump's own cabinet members advising him against putting tariffs on $300 billion worth of the remaining Chinese goods coming into the U.S., yet he defies expectation. In the long run, I think there are serious questions. Is this going to pay off? Economically speaking, is there a way someday for this to pay off?
Well, I think, first of all, going back 30 to 40 years, the U.S. economy was restructured deliberately around low-cost imports from China and other countries to replace industries that were no longer economically feasible here in the United States. So to slap tariffs on those kinds of goods is really no way forward because we don't have the capacity to manufacture things like clothing and shoes, et cetera, consumer-level goods at a reasonable price. So in a sense, the Trump administration is trying to backtrack on something that was baked into the U.S. economic structure years ago. My biggest concern is that this really paints the Federal Reserve into a corner because the Fed has indicated that it doesn't see a reason for more than the small rate cut that it's already given us. But there's a lot of talk that this whole ratcheting up of the trade war by President Trump is really designed to force them to lower interest rates even further. The problem is that interest rate cuts are not going to have any impact on the industries that are being affected by this trade war. Interest rates right now are not stimulating increased borrowing. There isn't a big demand for consumer or industrial or commercial loans other than in the junk bond sector. And so it's like pushing on a string. What are we actually going to see the Fed do? I don't think there's anything it can do.
Ted, I think that's a really good point that you make there. Obviously, your data is showing you that even though rates are going lower and lower, it's not causing more people to come off the sidelines and actually borrow. I mean, the one place maybe where we would see this is more deal activity here in the stock market. Are you seeing that because of these low rates and rates that are only going lower, we are seeing more corporate activity?
Well, I think clearly one of the big things that we're seeing is stock buybacks. And, that's not a sign of a healthy stock market or a healthy economy. I think, very cheap money makes it easy for companies to decide to essentially decapitalize themselves by giving away money through stock buybacks rather than invest in future investment for future production for sale and profit. That doesn't bode well for the future of the economy. I've maintained in my Bauman letter for a long time that that's the single biggest threat on the horizon, that investors, the corporate investors, don't have confidence in the country. And that's what worries me so much about this.
I know, we got to leave it there. The buybacks certainly have been on our radar too. That's Ted
No problem. Thanks, man.
economist, yes, with Banyan Hill Publishing. Thanks again.
Thanks, Ted.